That is low resistance liquidity run trading. Markets transition from high resistance to low resistance. Where does that occur? Where does it occur today? I'll give you a minute to think about while I'm grabbing a drink real quick. Just look at this chart. Tell me where does high resistance transition to low resistance? What time of day do we focus on? What's the flavor for April's teaching? The silver bullet. So it's a time-specific window of opportunity that the algorithm will present to traders that are aware, that are looking for it. You just can't go out there and say, oh, here's a fair value gap, so let's look at that and trade it. No. This is the reason why I get ticked off and I go on rants and I offend a lot of you 20-year-olds that want to copy me because you want to teach. You want to get clout that way. Here's how you get clout. Learn how to do it, trade, and go out there and show that you can do it live and trade and know what it's going to do beforehand. You will get the clout that you really want. Teaching it, anybody can take what I've already said and use a hindsight chart or market replay and look smart. I don't want my students doing that. I don't want any of my students doing that because anybody can do that. If you can call the market because you've understood how I've taught it to you and you understand how the market's going to behave, then that's wonderful. You know, I'm in support of that. But I want you to think about how, for instance, the fair value gap. That's the context or the multiplier used in the silver bullet trade. So let's walk through real time in context everything I outlined here, and it's all in the recording. I can't change it, and there's thousands of you that are sitting here watching me describe it live. Were we talking about the market going down for ES? No. What was the bias? Higher. What was I calling for as a target? 41.38 and 3/4 and maybe 41.40 and a half. So my bias intraday for the AM session was bullish. It was not 50-50. It was not, it's going to probably go down here, and here's where it's going to go. I was drawing your attention to that new week opening gap right there at 41.37 and a half, and even rather, and 41.40 and a half. In between was consequent encouragement, which is 41.38.75. While it was meandering around here, going sideways, I referred to that initial fair value gap on Monday, explaining how it's drawn through the entire week, much like I teach the opening price on Sunday. If you drag that through all of the week, it will treat it as fair value. It's also helpful for trading positions, long-term positions, because you can, if you're looking to be long, you want to ideally try to get something long below that opening price that opens on Sunday. It matters not how deep below, but your best case long-term swing trading, in other words, like trades that go longer than 2 weeks into months, if you will, they are better entered if you're bullish below the opening price on Sunday, or if you're bearish above the opening price on Sunday. It's not limited to that, but the best, if you go back and look at your old moves and such on a longer time frame, you'll see that's true. It's not just a form-fitted thing. I've said this in core content too. But I drew out your attention to the bullish breaker, which is the blue shaded area here, but we'll go to a 5-minute chart because that's where it started from. So here's your bullish breaker, and I mentioned this Monday fair value gap. Is it hard to see how we've accumulated in both those areas? It's hindsight now, you can see it clearly, but you being told real time at the time to focus there. Did it do what we were looking for? Yes. Did it run finally through the fair value gap that we were sitting behind waiting for it to give way? Yes, it did. Did it do it in the candles I told you it would do it on? Yes. Did it run to the low of the new week opening gap? Yes. Did it run for the buy side above here? Yes. Did it go to 41.38 and 3/4? Yes. Did it go to 41.40 and a half? Yes. Was there 5 handles to that move? Yes. Where did the market transition from high resistance liquidity to low resistance liquidity runs? Let's go back down to 1. You're waiting patiently. You're not retail. You might trade with a retail broker, but under my tutelage, you are not retail minded. You're not. You're not learning to do what retail traders do. You're not falling victim to the things they fall victim to. You're relaxing. You're letting price give it to you on a silver platter right there. What do you see? That fair value gap I mentioned. Right there. That is your silver bullet. Where's the draw on liquidity? This high. But if it's going to go above this high, Michael, where can it go? Well, that's what I have the new week opening gap there for. So what level above this high exists? The initial one right above that high would be what? Consequent encroachment, which is the midpoint between the high of the old new week opening gap and the low of this new week opening gap. So above this high, the level was 4138.75, which is midpoint or 50% on a fib if you drop it down over top of those levels like I did earlier. That gives you the target above buy side. So if you're buying inside the fair value gap here, and we'll just do a worst case scenario, so we'll do like the midpoint, 41.33.5, so 41.33 3/4. There's 5 handles. 41.38 3/4, that's 5 handles. That's the silver bullet. And you don't even need to get to the high of the new week opening gap. And you don't get all this fluffy cream on top if you left a runner. So, while all this choppiness was going on, for your notes, this is called time distortion. This right here is what makes people say time-based charts are useless, because they have no idea how to use time. I just showed you today. The time bender. So the context was we've already went from this fair value gap over here. Let's go back up to a 5-minute chart. So the fair value gap here. Do you like doing this, folks? Give me a thumbs up on the video if you like learning like this. If you're inspired by this, seeing it live and watching how it paints, give me a thumbs up. I'd appreciate that. That's an encouragement to me. I promise you it doesn't make me any more money on ad revenue, because I got videos that have a lot of thumbs up and it didn't do anything more than the videos that don't have much thumbs up on. It's just a marker for me to see that you're paying attention and that you appreciate me doing this, because I don't have to do it. But that fair value gap, we had lost my train of thought. Not sure what I was going to say there now. Let me go back to the 1-minute chart. It'll probably jog my memory. Yeah, time distortion. So all of these candles in here, this is time distortion. But if we go back to the 5-minute chart where everything originated from, our frame of mind and focus was, yes, we have this fair value gap. Yes, it dropped down into a discount as we would expect it to do, into a bullish breaker, which is a discount array. How far could it go down to the low of that candle right here? Right here. This candle at 710. Why isn't this the breaker? Because the body of the candle of this one is higher than the body of that candle. Even to this high here, I don't care about that. The volume inside that candle dictated that it would be closing here. The wicks do the damage. The bodies tell the story. You can't just go, well, this looks like a breaker. No. You have to grab the right range. And I'm giving you and teaching you, and have already taught, how to identify the specific order block. How you use these order blocks That's experience. You have to be mentored by me. You have to see me doing it. You just can't say every down closed candle is an order block. It's just like I'm going to show you every fair value gap isn't something to be traded. You have to have an understanding of narrative. Narrative is, in the simplest way of explaining it, it would be knowing what the algorithm will do based on its source coding. Not that this is what a pattern should show. It's what's the algorithm going to do, and why should it, and when should you expect it to happen? Now, I'm going to say that again, and before I complete this video today with you, think about what I just told you to think in terms of what narrative is. This is what you write in your notes. Narrative is the understanding of what the algorithm will do next, why it will do so, and when it will do it. Those are 3 questions that if you were to do a poll publicly, even if you asked people that call themselves market makers, desk traders. I used to work in the city, and I was working at a prop firm, and I was doing this, and I was doing that. Do this. Call it like this. Because those individuals aren't going to believe that there is this much level of manipulation and control. They think this is all buying and selling pressure. And the question is, that I always pose, how can random buying and selling pressure present the level of precision that I'm showing you exists at the time I'm telling you to anticipate it? It takes more faith to believe that garbage than it does to see the proof and evidence I'm presenting every time I sit down with you. So narrative is the understanding of what the algorithm is going to do in price next, why it should do it, and when will it do it. I walked you through it today, like I've done many times, but I want to go into greater detail here and close this one and bid you all a good weekend. When we had this consolidation in here, I drew your attention to the fair value gap here. I told you that the initial fair value gap on Monday, that was one of interest for me, and I told you I'd drag that out, much like a Sunday opening price. Just like I teach on an intraday daily basis, the opening price at midnight. You can utilize that for power 3 concepts. When you're buying below it when you're bullish, selling short above it when you're bearish. It's a really nice filter. It doesn't mean you can't take shorts or longs that would not be in agreement with that idea. It just means that that's the best of the best. And if you're really trying to be disciplined and you're willing to let a lot of trades go by, but you just really want the best ones, and you want to have like the record that I'm showing you publicly because everybody's asked for a track record. My track record is what you see. I'm accurate. When I call it, it works. When I whistle for it, it comes. That's the track record. I'm bringing it publicly. You don't need me to push a button. You already know how to do that part of it. What you don't know is what I'm showing you here live. That's mentoring. Showing you what's going to happen in price before it happens, and then it does it. It encourages you. It shows you that the concepts are indeed valid, and it shows and proves authorship. So let's go into those 3 questions here with this morning and kind of like solidify this as a lecture that you can be thankful that you were part of. The initial opening range I mentioned here, that was providing us initial resistance on the idea that we would see ES get in sync with what the NASDAQ was doing. So go back and think about what I was suggesting about the dollar. I wanted to see it go weak, go lower, but it could. Here's one of those if-then statements in logic. If the dollar goes lower, ES can go higher easily. However, if that doesn't occur, then we find that the dollar consolidates, which is what I said in the recording. Go back and listen to it. It can consolidate. Well, the dollar's been consolidating. Don't believe me? Let's take a look at it. Yes, we went up here, but it's inside that range high and that range low. So we're doing what? We're just going sideways. So a consolidating dollar is not equivalent to a lower dollar where we would expect higher prices in ES, but we would not want to go long on ES if this was raging higher and traded outside of its dealing range high. That's not what we want to see. But we haven't seen that yet, so it's all consolidation. Now, let's ring in indicators. Okay, there's a couple companies out there, a couple individuals out there making indicators for TradingView and other platforms. And don't get me wrong, I love the publicity because it's getting people knowing more about me, and they can find the channel and they can learn how to trade for free and not have to worry about paying anybody to do it or pay a ripoff that's been taking my content and rebranding it. The indicators would plot these little areas here as fair value gaps. That's not what it is. This is not a fair value gap that you could utilize for that purpose. If you go back in the recording, you can hear me right down here. I said, I don't want to see it turn here. Because not that it can't go up here and treat that as a sell side imbalance, buy side efficiency, or a premium fair value gap to go short and expect lower prices. It's already done 3 stages. A low that went below this one over here. This low went below that one. Now this low was here. Go back and listen to the recording. During this time, I'm saying I don't want to see it turn here. So if it starts to turn here, it's going to do what? It's going to trade back up into these areas here where anybody just watching one ICT video or learning from somebody else with $1 mentorship, rebranding my stuff, they're going to say, oh, this is a short. This is a bearish order block. It's not. Because the narrative is stating that the dollar has already done 3 stages of runs on sell side.